Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase, a podcast where we help you focus on market events that we believe truly matter. Now I wanted to start the new week with two pieces of good news. First, UK GDP did grow back to above its pre-pandemic level, which psychologically is a pretty important milestone. Second, the value of global bonds offering a negative yield fell back to about $10 trillion in total. Now, while that's still a big number and far from ideal if you're looking to generate income, it's still a significant fall from the almost $18 trillion at its recent peak in late 2020. So, long way to go, but that's two steps in the right direction. Now this week, we do expect US Q4 earnings to be a key focus, and recall this is coming at a time when cyclical sectors are leading market performance in the US. Now Friday's start was a little bit weak. Banks did report expectations beating earnings, but a lot of that came from the release of prior loss provisions, not necessarily from a big pickup in underlying earnings growth. Now that soft start came at a time when the US also released a relatively weak US retail sales and consumer data report, but there are two things that really stood out to us following those. First, these didn't hold back both the New York and San Francisco Fed presidents, emphasizing the need for higher policy rates. And second, in the consumer sentiment report, the inflation expectations number echoed what we've seen in some of the market data. The fact that inflation numbers, of course, ticked higher, but they're staying within historical ranges. So really feeding into the Fed stance. Now, over in China, the country did post the highest trade surplus since records began in 1950 and really emphasized the point that exports continue to be one key engine of growth, beating expectations compared with the relatively softer imports number. This point is key, of course, as we look ahead this week to the release of China GDP growth, where consensus is looking for full year 2021 growth of about 8%, which is a pretty respectable number. But the key here is to watch two things in that report. One is where sort of the key drivers of growth are, particularly looking outside of exports. And second, whether there are signals in that report that create more room or more expectations of more policy easing to support growth in China. So those are the two things we'll be watching, and I think markets will be as well. Finally, of course, looking at the week ahead, besides that China GDP report, we'll of course be taking a look at whether we get the same signals from a broader range of Chinese data, including industrial production and retail sales. We do have inflation data due in the UK as well, but perhaps most important of all will be central bank policy meetings from the Bank of Japan and the ECB. And here, of course, we'll be looking for any signs that they're considering following in the footsteps of the Fed. That's important for markets because one measure will be whether it creates room for the recent weak sentiment in the US dollar to extend further. So, few sort of key events to watch as we go through the rest of this week, but we'll take a pause there, of course. If you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a very happy trading week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.